And I think the valuations of the bank sector are healthy. So I don't think this is systemic in the sense of weakness in the underlying system. But what it is doing is clearly raising question of who, as these supports come through from the central bank, and you get these sorts of bailouts, someone has got to take the cost of that. And what the market is worried about is that bondholders, which previously were seen to be very safe, may not be as safe as they thought, and the same for equity holders. So the underlying banks may be strong, the system may be strong, and I agree with all of that. But obviously what I think investors are thinking about is who will take any of the losses as these further supports come through.
The other critical question, it seems at the moment, is to what extent the market is reflecting concerns about unrealized losses in the private markets at this point. I think we can all look at public markets and understand prices and valuation of assets in public markets. But Peter, I think we're still trying to understand to what extent there is a tail wagging the dog aspect to the unrealized losses that sit within the private markets at the moment.
Yes, I agree. It's easy to see price discovery in the public markets. It's very hard to see that in the private markets. There has been a lot of disintermediation into private markets over the last decade, and they've grown very sharply. And there's, a risk, of course, that the underlying assets have not been repriced appropriately for this rise in the level of interest rates. But again, I think we have to separate price performance and who is exposed and takes potential losses from systemic underlying risk. And I think, as you were saying earlier, the economic conditions that we're seeing at the moment, the underlying fundamentals for the banking sector, the much lower level of private sector leverage that we have in aggregate in corporate balance sheets and household balance sheets is much healthier than we've seen going into previous economic downturns. It doesn't prevent shocks, and it doesn't prevent an impact from shocks and higher uncertainty, but I don't think it's as systemic in that sense, and that would be true in the private markets as well.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.